trade in the grain markets here early on Wednesday morning. It is 6:30 a.m. Central Time. December corn futures up 2 3/4 cents at 557.5. January soybeans down 2 at 12.10. December Chicago wheat up 3/4 cent at 779.25. December Kansas City wheat down a half at 793. December spring wheat up 3 3/4 at 1027.5. If you guys are listening on the podcast, appreciate it. Leave me a rating or a review. If you're watching on YouTube, hit that subscribe button, hit that like button to help me to grow this channel. If you need some additional assistance from me, go to my website. It is www.standardgrain.com. Check out the subscription service, guys. $49.99 a month. I'll send you my morning email, my text message service, my subscriber-only videos. I will send you all of my grain marketing recommendations, corn, soybeans, wheat, cash sales broken down by crop year, by percentage. I'll let you know exactly when, how I'm doing all of this stuff. Check it out. It's a monthly deal. You can cancel it anytime. No other fee, no other obligation. Will not try to sell you anything else. Certainly give this deal a shot, guys. I think it will be worth your while. We had a USDA report yesterday, and the USDA surprised the trade with a lower than expected soybean yield estimate for the United States. The general expectation ahead of the report was that USDA would increase its yield estimate for the U.S. soybean crop. And not only did we not see the increase, we saw a reduction. So USDA now estimates the U.S. soybean yield nationally at 51.2 bushels per acre, which is down from 51.5 last month and below the average trade guess of 51.9. So going into the report, if we're to believe that the trade was expecting a yield of 51.9 and we actually got 51.2, that's a difference of like 60 million bushels, which is significant. That's a significant shift versus expectations. The areas where you saw the declines versus last month, the big one was Indiana, down 3 bushels per acre versus October. Ohio was down 2 bushels per acre. Iowa down 1 bushel per acre. Kansas was down. Oklahoma down. Texas down. So the trade expected a higher soybean yield. We got a lower one, and that was the reason for the big upward movement in the soybean market yesterday. That yield number was the big sticker shock item. That was really the big surprise. Here is, if you're watching on YouTube here, this is the map versus last year, and you've still got big losses versus last year in the Dakotas, in Minnesota, places like that. But you saw some changes month over month, and those changes in Indiana and Ohio and Iowa in particular responsible. Now in corn, we did not see any real big change. The corn yield came in at 177, even very, very close to what the trade had expected prior to the report. You did see some decreases in some places, increases in other places. Illinois and Indiana down, Missouri down, but then you saw better yield estimates versus last month in the Dakotas, Minnesota, Nebraska. When it comes to this year versus last year, again, Central Eastern Corn Belt much better. North Dakota, South Dakota, and Minnesota glaringly bad, and those are your areas that drag down your national corn yield this year. So, when it comes to the production numbers, the soybean yield number and the fact that the yield number for beans was reduced rather than increased, that was your big surprise yesterday in this report. Now, there were also some demand changes that were noteworthy. USDA reduced its projection for U.S. soybean exports for the current marketing year. And this is something that a lot of people, myself included, expected. They reduced the number by 40 million bushels, the export projection, and that's a decrease of about 2% versus last month's projection. So, grand scheme of things here, USDA now projects that exports of soybeans this year will decline by 9.5%. Sales in total for the marketing year are down 33% versus last year. Shipments in total for the marketing year are down 30% versus last year. So I think that it's very likely that you will see additional downward revisions to that export projection in future reports. Does that come in December? Does it come in January? Or maybe we see some massive resurgence in the export program. But I think USDA kind of conceded yesterday that we're not getting those shipments back that we lost as a result of the hurricane in September and October. USDA did increase its projection for corn demand via ethanol. The corn demand via ethanol number for this current marketing year was increased by 50 million bushels, and that more than offset the the higher yield number on the balance sheet. So we actually ended up with a lower carryout estimate. Ethanol production has been running near record high levels during the last few weeks. You can't argue with this number. As a matter of fact, you could argue that the ethanol number should come up a little bit more. So demand for corn via the ethanol industry, very, very good. Got some rains returning to the plains and the Corn Belt beginning today. On the radar here this morning, we've already got some rain over North Dakota, South Dakota, and this system is going to work its way east, of course, into Minnesota, Iowa, Illinois over the next 7 days, and most of this is just over the next few days here. Most of these areas will see totals of no more than an inch. You're not going to see any real heavy rains out of this deal, and it's going to make its way out through the eastern Corn Belt by late in the day Friday, I think. So this is kind of a quick-moving system. It's not going to bring a ton of rain necessarily. Could result in some holdups, I guess, in some areas of the country. Inflation continues. The government had their PPI, or Producer Price Index, data out yesterday for the month of October. PPI measures the average change over time and the selling prices received by domestic producers for their output. Wholesale prices rose 8.6% versus the same month last year. That's the highest annual rate on record. These records only go back to 2011 for PPI, but this is just further indication that inflation continues here. A lot of banks, different private entities, as well as Fed board members, are now calling for rate hikes earlier in 2022, like mid-2022 is what a lot of people would like to see now because of this inflation situation. And raising interest rates, of course, is really the only tool that the government has in order to tame inflation. I suppose you could make the argument that in this particular instance, a lot of this inflation is being caused by supply chain bottlenecks and logistics issues. Maybe if they could solve those, they could fix some of the inflation that we have going on. But in any case, a lot of people calling for rate hikes sooner than had previously been expected. Friday's last trading day for November soybean futures. Make sure you take a look at any positions you have there. We've got ethanol production today at 9:30. Cattle market was mixed yesterday. The feeders sold off sharply when the USDA report came out, largely because the corn market rallied sharply right off the number and then backed off a little bit. So we finished off the lows in the feeder cattle, and fat cattle finished mixed, so it wasn't a half bad performance. Outside markets, we've got the U.S. dollar higher. It's been pretty strong. The S&P is down 12 points. It broke that winning streak yesterday. The Dow is down 60. Bonds off a little bit. Precious metals off a little bit. Crude oil is down 43 cents, and the December WTI at 83.77 last. Everybody have a wonderful day today. I'll talk to you guys same time tomorrow.